In the previous price action video, we discussed how to identify flow in the foreign exchange markets. Today, we're going to be discussing how to find areas of value once you've identified market direction. Okay, so now that we're taking a look at the charts, here's what you need to know. When we take a look at markets, we've already talked about how to identify flow. There are several specific ways that certain traders are going to see the charts differently. You can use moving averages. You can use pure price action to get an idea of market flows. We're looking for simple things that are very common in the price action world. Higher lows, higher highs. This indicates a market uptrend, and we would call that an upward flow. But how do we spot actionable points to get involved with that market in a way that can reduce our drawdown and find great risk to reward setups? At the end of the day, we are not here to risk one to make one and to have a 50-50 shot. That's purely gambling, and we could just go to the casino for that. What we're trying to do is find good risk to reward setups in strong markets backed by nice price action technical analysis. So how do we do that? There's a couple different ways to find areas of value, but in this video, I'm going to give you my personal favorite ways to do so using price action. The first thing I want to do is now that we know how to identify market flow, we can safely assume that this market is likely going to continue its upward trend. It's not a guarantee, but remember, trading is all probabilities. We don't want to be 50-50 shot, but we at least want to know that or understand that it is a probability-based game. It is not a certainties-based game. This is why when we talk later about risking adequately, you need to know that you can't risk too much on one particular idea. It's about many, many ideas. We want the edge to play out in our favor over time. Now, identifying value is the very important topic that everybody wants to know. When do you get in? Where do you get out? How do you identify, how to take a trade with no drawdown? And all those things are nice on paper, but I'm going to give you my best adequate answer to find very, very actionable zones on a chart. So we've already identified that this market is trending up. We've got nice higher lows and higher highs. But remember, when we talk about higher lows and higher highs, I want you to mark those spots on your chart when you're doing some analysis. We discussed something very important in that line where we talked about higher lows, right? In a market uptrend, to me, what's more important than the higher highs is the higher lows, okay? Because the higher lows show that at some point the market paused, pulled back, and found buyers again. Even if it didn't shoot past the highs, which is also still very important from a price action standpoint, knowing that there's at least buyers below is very important in identifying actionable moments on the chart. So what we're going to do here is I'm going through and I'm marking previously held areas of lows, right? Or higher lows on the chart. And identifying these lows is very simple and is the first step to identifying market areas of value. We've now marked a few different levels on our chart, and these are points on the chart where we can start saying, okay, if the market flow continues, there's a good chance that levels that we've marked here would find some sort of reaction from price. I'm going to show you something. We're going to deviate for a moment, and I want to show you an example of something that Ivan and I, who is a friend of mine who comes on the channel sometimes, Ivan and I were discussing something about the pound dollar. And he made an excellent point at showing a very, very clear change in market direction. If you highlight some of the levels here on pound USD and we repeat the process that we just discussed, finding areas of support or areas of value where price is finding strong upward pressure each time markets come down to these levels, right? So when we look at this from just this perspective, we are seeing a pretty consistent attempt from buyers to push off of our levels of support, right? Just a very simple idea, right? We shoot up, we pull back, we shoot up, we pull back, we shoot up. We're finding buyers. Every time this thing kind of comes back and tests the water, it finds buyers. And that's what the market is really doing. That's why markets move in wave. They are constantly testing the waters. They're testing, are there buyers below? Okay, good, keep going. Are there buyers below? Good, keep going. If there comes a point where that upward trajectory nature changes, this is where we need to change our bias as traders. Look at what we saw here, and this is going to be early warning signs to potential redness to come. As price pulled back to levels of support that we had marked on our chart, several instances occurred where the market tried or barely even tried on this one. We blew past this level. We failed there. We did hold this level, but we did not get very far before failing there again. Rejection came in. We failed through all those levels, one after the next. And what this showed us is that this nature, this flow of the market, no longer existed. Holding on to this belief is really dangerous, right? Because then what happened next? Not only did the market no longer show adequate signs of holding these areas, but now the market showed adequate signs of using those same areas against the bulls and led to a major sell-off. So we need to be very quick to recognizing when the flow of the market and areas of value are no longer holding. And assuming that, you can't assume that it's going to be working every time. But going back to, our idea, when we start identifying areas of value on a chart, we're seeing strength to the upside. We're seeing this level hold. Our first reaction is, okay, in a market uptrend, we are expecting this to hold. If it doesn't, though, that's where we need to be very quick to bail on a poorly executed trade. So for example, a simple idea here today, taking a look at the Nasdaq 100, a chart that we often focus here on at A1 Trading. We talk about this one all the time. Price comes down to this area, we would expect, based on historically what's been happening, the price action of this area, we don't really want to see this market come down much further than where we currently sit. This is an area of value because using history does not, and this is a very important note. A lot of times people will say, price action is not perfect, and that is the absolute truth. The problem is history does not repeat itself, but history does tend to rhyme. And that's the thing, that's the distinguishing thing. I'm a history nerd, so that felt really good to say.
Again, it's like poetry, so if they rhyme.
But not only that, right? Like from just a perspective of like the chart, people overestimate the ability of charts, right? They think it's like a pinpoint perfect, line sometimes. Whereas I view support and resistance, supply and demand, however you'd like to call it, areas of value. There's different fancy names for it, but the main point is, historically, this level has been holding well. Our first reaction is going to be holding this area bullish, right? Don't overthink it. Support is support, resistance is resistance. Don't overthink it. There's no magical way to know that this level is going to hold perfectly every single time. But we caught this move yesterday. In fact, this was a trade shared inside of our VIP Discord. Let me show you so that you know I'm not just making that up. I didn't take the trade. It was actually Frank, who is one of our traders here at A1 Trading. All of our trades are shared here. You can see he basically picked up the position right as price pulled back down into this area of value. And you can see exactly what we're talking about, right? An area of value was reached. He took the buy trade after a major change in direction. We had a big break to the upside, nice momentum, pulling back. So the flow changed to the upside and pulled back to a level of support. From there, the market rallied. I believe he secured some profits, and from there, it's been good. So here's the thing, okay? Understanding the flow of the market is step one. Understanding where to find value in that market is step number two. We don't want to be buying at the highs. We want to be buying on discounts. We want to be shorting in a downtrend on premiums. That's what we're looking for, right? So we are looking for pullbacks, and look at how price is already reacting to this. Now, it's not a guarantee that this market can't roll over and could continue downwards. It sure could. But we have to anticipate that we're going to take some losses, but what we're looking for is our winners to outweigh the losses. That is the key factor to this concept. A second ago, I mentioned our VIP Discord channel. If you would like to join the VIP Discord channel, you get the chance to see all of the trades being taken by my team, Frank, myself, and other people. We have a couple different analysts that we recruit from around the world to share ideas and their trades with members within our group. On top of that, we also have a live trading chat room where you can meet other traders from all around the world. We have educational material available, and we do some coaching webinars. More information will be linked down below in the description. If you'd like to check it out, use that promo code down there and you'll get a discount off for being a subscriber to the YouTube channel. Now back to the video. So as we go through and we start marking up our ideas, we start looking for areas of value, We need to know that a market is flowing. That's the first component. The next thing is to identify points of value. How do you do that? Well, there's some interesting ways that you can. I actually, as controversial as a simple RSI is, I actually love using an RSI to identify or help me identify key pivotal spots in the chart. You can kind of see them by default. You can see where this market has already responded historically, but let's try another exercise. If we scroll back here, for example, and we take a look at a scenario in which this market was flowing to the downside. If we mark on our charts different instances where this market popped up to the overbought reading, and I'm using, just for clarity, a very simple 4-period RSI. I just use it for a gauge on price. It's nothing crazy. Now, if we actually use this is a very handy way to do this, and you guys might try this on your own. Each time price popped up to a overbought reading by a significant margin, we could mark that on the chart really quick. And this is a great objective way to find some areas where price was reading overbought according to the RSI that we're looking at. What we can do there is we can say, well, where is the common trait among all these pop-ups, right? So we popped up, and every single time we found resistance here. That's a pretty clear level of resistance. What we've done is we have marked a point on the chart where several instances have come up and pointed to this level, this area is overbought. Now, to be fair, we were all the way to here, so we should probably draw that as a pretty wide zone, considering all things that we pointed out. So just understanding that, the flow of this market is to the downside, and look what happened. We come back up, and sure enough, we reacted to it. Sure, we may have broken out, but look at this. We didn't, right? But we could have broken out, but the point is it's never going to work perfectly. But the idea is the same. We identified using these, just a simple, point on the chart where you're seeing rejection, rejection, rejection. We spot that, we mark it, and when price comes back to it, we are anticipating that in a downward flowing market, most likely we're going to continue down until further notice, until proven wrong, right? How do we prove wrong? Well, that's going to be probably the next episode where we talk about placements of trades, knowing when to get out of a trade. That's going to be our next episode on this topic. But what I want you guys to understand is that identifying, for example, another level is right here. We see it on the chart, and then as we fast forward, we can use that to our advantage. Here is an example of one where it did not work. And so we need to know if this is the idea, if we're saying, okay, this market is in a downward flow, we've got a key level here. Why didn't it work there? Well, maybe the market conditions changed and now we flowed to the upside. How do we get out of that trade with minimal damage, right? So we showed you 2 examples right there on the NAS 100. If the market pulls up to this level and we sell and we make great money on this trade, how do we avoid giving it all back to the market when we take a similar trade right here and the market goes against us? The thing is, I'm not going to sit here and show you an only winning scenario where all we ever do is win. The thing is, you're going to lose. The point is, how do you lose gracefully when it goes against you? In the next episode, that's exactly what we'll talk about. So stay tuned. Make sure to hit the thumbs up button if you enjoy these free videos. Subscribe for more free content, and we'll see you in the next one. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.